Hey folks, Bob Desmond here at the Contrarian Trader, and welcome to Best Stock Charts for the coming week. What we're going to talk about today are my thoughts on where the market is going in the short to intermediate term. We're going to also talk about what we were doing last week in terms of position strategy, and then we're going to segue over and into Best Stock Charts for the coming week, which is where we do a cursory overview of the charts that are high probability setups for the coming week. And tomorrow, I'll be sending out to members the week ahead commentary where we'll do a deep dive into best stock charts, meaning today I'll do an overview, a cursory overview of as to why I like those charts. But tomorrow, we're going to talk strategy about what we would need to see before we enter the trade. So we'll be doing a deep dive into the daily, weekly, and perhaps even the intraday charts. We'll also do market pulse check, which is where I review the health of the overall markets. And that's a must know, right? Because 80% of all stocks trade with the overall market. So we need to first do our due diligence. How is the market setting up? And then we'll segue over into our deep dive of best stock charts, but that's tomorrow for members. So before we go into the charts and my thoughts on the market, I want to talk to you about TrendSpider. We're sponsored by TrendSpider. They are a partner of ours. We are a certified platinum partner and proud to be one. TrendSpider is the next generation in automated technical analysis. I use it. It is a major time saver. And it also helps me be far more efficient in terms of being able to overlay my charts rather than having to toggle back and forth between weekly charts, daily charts, 4-hour charts. All I need to do is click the multi-time frame analysis button on TrendSpider, and it overlays everything for me at the click of a button. And I'm going to demonstrate it for you in a moment. But you can also go over to their website. If you're watching this on YouTube, go down to the description area below, click on their link, or if you're watching this on the website, look above and you'll get a link to TrendSpider above. I encourage you to take a tour. They also have a 7-day free trial offer, and it's also included with our gold level membership. So check out TrendSpider. They have back testing strategies as well. I mean, so many features. I can't go over them all right now. I encourage you to do so. Check it out, and more to come on TrendSpider in future commentaries. In fact, we're going to segue over into using a chart of the XLK using TrendSpider. Let's talk about why I believe that this market is going higher. A couple of weeks ago, this is a weekly chart of the XLK info technology sector, and we broke out 3 weeks ago above the September highs on the XLK. The SMH, which is the semiconductor sector, it also broke out to new all-time highs. Now we are on the verge of a major breakout on the major averages. So the probabilities of this market breaking out are fairly good. Then when you fast forward, we'll come back to this chart. When you fast forward to the economic data, which came out on Friday, we had the GDP number, which came out at 3.2%. It blew the doors off. The expectation was for 2.3%. Now, what is even more encouraging about the GDP number is that traditionally GDP for Q1 is usually the weakest for the year. This is the strongest GDP read that we've had since Q1 2015. So the argument could be made that GDP was higher in Q1 because you had factory orders which pumped out goods to export to China in advance of the tariffs being implemented. Could be an accurate statement, could be an accurate assessment. I'll keep an open mind about that possibility. But as it stands right now, as we know the facts to be, GDP blew the doors off of expectations. And consumer sentiment data came out better than expected yesterday, and it was better than the March data. So on the economic front, while we've had some mixed numbers, last week we saw some strong numbers. I mean, durable goods came out at 2.7%. The expectation was for 0.5%. So very strong numbers here on the economy. It can't be ignored. Now back to the XLK. When you overlay the monthly trend lines, just with a click of a button, this is TrendSpider, you can see that we broke out above resistance in dashed line. That is the monthly overlay on a weekly chart. Just one chart we're looking at, folks. We have the picture on a monthly basis as well. Love it. And we have clearly broken out. We even retested the breakout point, and we rallied off the lows of the week last week. Now, where are we going from here on the XLK? We'll take the monthly trend lines off. We'll throw up the weekly trend lines. We're probably coming up here to the 81.29 level, thereabouts. That would mark the next resistance level extrapolated out from the prior peaks. So there is more room to run here. We remain bullish on the XLK. Might it pause for a few days and then resume higher? Sure. Let's take a look at a daily chart. All right, so here we have a daily chart. We pulled back on Thursday. Friday, we reversed off the lows of the day. Let's throw up some resistance levels here. This is on a weekly basis. Whenever you see a dashed line on TrendSpider, that means that you're using an overlay from a different time frame. Case in point, we'll take off the weekly resistance levels, throw up the daily. Note how these are solid lines, okay? And when you throw up the weekly, they are dashed lines. That's how you differentiate. So it looks as though we have more room to the upside here. The path of least resistance is clear. It is to the upside, so the XLK is looking really good. Now, before we begin talking about best stock charts for the coming week, I want to talk about what our strategy is right now. We took off our short of the Russell 2000. We kept our loss very small, and we have been in a rebuilding mode, meaning the banks began to break out last week. We began buying the banks earlier in the week when we saw some strength, and then as we broke out on a daily basis on the banking sector, we added more to that position. So the banks are looking good. We're bullish on the banks. With regard to gold and the miners, I'm a bit concerned. Let's go back to TrendSpider for a moment. All right, so here's a chart of the UUP, the Dollar Bull ETF. And as you know, gold trades inversely of the US dollar. Now you can see that on a weekly basis, we are breaking out. And if you throw an overlay up here, we'll go with the monthly overlay first. You could see that we have more upside potential here, possibly rallying up to the 2669 level on the UUP. So I'm concerned about a continuation breakout on the US dollar longer term. Now, shorter term, I did mention to members on Thursday's market wrap, I was a bit concerned about the US dollar being a bit overbought. That might put a bid under the gold and gold miners. Here's what I had to say on market wrap to members. It's kind of a bet that the dollar has come too far, too fast, and is ripe for a pretty serious pullback here. I mean, we were kissing the upper band of the third standard deviation Bollinger Band 3 days ago. And now here we are, even further extended, and this generally doesn't end very well. But looking at volume, you know what? Could they squeeze it up one more time? Sure. I don't want to discount their ability to do so. With regard to Nugget, why didn't we go adding more here? The reason was, now we did get the pullback that we had expected. This is a daily chart. Let's go drill down to let's go to a 2-hour chart. But we did bounce back off the lows of the day on the dollar. So by no stretch of the imagination is the dollar broken. It appears as though we have more upside potential here. So that's why I'm a little bit cautious on gold and the miners. Listen, longer term, I'm very, very bullish on gold and the miners. All it takes is 2% inflation. Let's go over to the EU website. And you may be saying, what the heck does the euro have to do with the price of gold? It has a lot to do with it. The euro is the major, I think it's about 51 to 55% of the Dixie basket of other currencies that the dollar trades against. So if the euro strengthens, in all probability, the US dollar is going to weaken. Now, what might cause the euro to weaken? Because Lord knows that Mario Draghi doesn't want to raise rates ever, right? He has no intention of raising rates. Their mandate. Now, if you take a look at the European Union Central Bank's own website, their mandate is price stability. And here they have it. Price stability is defined as a year-on-year increase in the harmonized index of consumer prices for the euro area below 2%. They need to keep inflation below 2% in the Eurozone, because if they don't, then their mandate is to get price stability. What must they do? They need to raise rates. So what does that do to the US dollar? The US dollar gets crushed. The only reason why the dollar is rallying against other major currencies right now, despite the fact that we are still historically low on interest rates, is because relative to other central banks around the world, we're far more bullish, if you could believe that. But we are printing money like it's going out of style. And at some point in time, this game of musical chairs is going to end. The music is going to end, and we're going to be left without a chair. So get ready for the next big run in gold and the miners coming down the pike. It might not be this year. It could be 2020, but it's coming. As sure as God made green little apples, it's coming. So be ready for it. We are. Okay, now let's segue over and into our best stock charts for the coming week. For our momentum trades and continuation breakout trades, I'm going to go over the weekly charts. For our extreme oversold trades, I'm going to go over the daily charts. The reason being, the weekly charts will show us how we closed out the week, and that educates us because it tells us what the probability is of a continuation breakout for the coming week. Tomorrow on the week ahead commentary, I'm going to go over again the weekly charts, then the daily charts, because we're going to use the daily charts and perhaps a 4-hour chart to identify where we want to trigger our trade. So, members, more to come tomorrow on the week ahead commentary. So let's kick things off with CyberArk. Weekly chart. This is internet security, cybersecurity. Last week we had an outside reversal week negating a bearish key reversal the prior week. This stock is in fuego. We have Stokes, which are moving up higher. RSI looking good. It appears as though it is going to press higher as well. So it's validating the price action on a weekly basis for CyberArk. Volume was good last week. There's nothing not to like about this chart of CyberArk. Now, the key to remember is that this is a momentum play. When is this rally going to end? I'm not sure. But when it does end, it's not going to be pretty. So if you're going to trade these momentum stocks, use a trailing stop loss order. Let the markets take you out. Capture as much upside gain as possible with minimal downside risk. So CyberArk looking good. CIBR. This is another cyber play. This is a daily chart. Let's go to the weekly. We broke out last week, an outside reversal week. A beautiful setup here. It appears as though we are moving higher. RSI, higher lows. And we have a lot more room to the upside here. I mean, we're only at 63.7 on weekly RSI. Volume last week was outstanding. Higher lows in the breakout on Ultimate Oscillator. This chart's looking very good. Again, nothing not to like here. We'll visit the daily chart and perhaps a 4-hour chart tomorrow on the week ahead commentary. The next chart up, Adobe. Now, Adobe, it broke out back here the week of April the 1st. It's consolidated. It's retested support, not once, but twice. Then last week, it broke out of this base, rock solid. Adobe, in all probability, is moving higher. This coming week, RSI validating the move higher. Stokes validating the move higher. Volume is a concern, I will say that. Volume could have been a bit better. Ultimate oscillator, higher lows, looking good from a weekly perspective. We'll drill down tomorrow with members on the week ahead commentary to a daily and perhaps a 4-hour look. Store Capital, this is one I spoke about a couple of weeks ago, and it did not have a good week the week of April the 15th. Blame it on tax day, maybe. But last week what we did is we had an outside reversal day and we closed back above support. Good stuff. So what I want to do now is take a look at where our resistance levels are. You could do this on TrendSpider as well. Okay, so what we're looking for here is a breakout above this upper band of resistance and ideally a close above 33.76, because as I always like to profess to members, the test is always at the top. Are we going to break out above this prior high, or do we fail and roll over? I think that we're breaking out here. So members, will talk more about STOR tomorrow, our strategy for entering the trade, where do we want to put our stop loss, what is our price target. So more to come on the week ahead commentary. The next chart up, Dorado Resorts, weekly chart. This is a beautiful chart. It's very hard to tell here, but we broke out last week on a weekly basis. The prior high was at 50.97. Last week's closing high, that's most important, it closed at that high, was 50.98. So we broke out. So what we're looking for here is a continuation move higher. But first, what we want to do is identify on a weekly and perhaps an intraday chart, how healthy is this chart setting up? Are there any negative divergences to be concerned about? If not, thumbs up to a trade on Dorado Resorts. Volume is a concern. I have to bring it up. You don't want to talk your book. You want to go into a trade with your eyes wide open and you're seeing lower highs on volume. That's going to have to change. Our indicators are looking good. Stokes are rising. Ultimate oscillator rising. So it's looking good. Again, members, tomorrow, the weekend commentary, we'll do a deep dive on the daily and intraday charts. The next chart up, Enphase Energy, ENPH, the symbol, weekly chart, and outside reversal week. Beautiful setup here. We did see a little bit of resistance and indecision 2 weeks ago, the week of April the 8th, then the week of April the 15th. But last week, it was off to the races. An outside reversal week. Traders tried to take it down. Buyers bid it back up. Very bullish candlestick. You can't ignore it. In all probability, we are coming up to a 12 handle on ENPH. Volume was outstanding last week. Nothing not to like here. Members, we'll talk strategy tomorrow on the week ahead commentary. Now we're going to segue into our extreme oversold stocks. And for the purpose of this discussion, we're going to use daily charts because I just want to illustrate why we're interested in these trades right now. The reason why tomorrow I'm going to go over the weekly and monthly charts when necessary with members is to identify where we have historical support below. You must know it. We'll use TrendSpider for those purposes because one click of a button and it'll be able to tell me on a weekly and monthly basis where my historical support and resistance levels are. And a case in point here, U.S. Steel will be looking for historical support on a longer term, a multi-time frame basis, not just a daily basis as this chart isn't showing us. We have no idea on this chart where there is historical support below. And to trade extreme oversold trades, you must know where that support level is, or else you are catching a falling knife, and that's never ever good. So RSI, this is why we like it. This is why I made it onto our screener. RSI on U.S. Steel is at 19.67. It just barely makes it onto our screener. Stokes are moving lower, rounding top, but they're beginning to set up like a coiled spring. So the stochastics are looking good. Price action, a bit of indecision. I think that we move lower though. Down volume is declining, which is a good sign. And what we'll also want to look for tomorrow on the week ahead commentary is the relationship between steel, U.S. steel, and the U.S. dollar. Is a stronger U.S. dollar putting pressure on U.S. steel? Maybe. We don't know. We'll take a look at the relationship tomorrow on the week ahead commentary. Because if the dollar gains strength and there's an inverse relationship, well, then you want to avoid U.S. steel until the dollar hits historical resistance and U.S. steel hits historical support. More to come. Members tomorrow. But I would not be a buyer of U.S. steel on Monday morning. Not yet. Another extreme trade, and this is the only short trade I have on the books, I think. Actually, no. This is the second one. Qualcomm, daily chart. First off, this is a potential short trade. Now, before you go giving me a thumbs down, listen, I think that Qualcomm is going higher next week. I have little doubt about it. It's pulled back. It was trading above its 2 standard deviation Bollinger Band. RSI was above 90. It pulled back. Folks, I think that was the pause that refreshed on Thursday. On Friday, we had an outside reversal day. You had buyers which bid the shares back up. This is a very bullish setup. I think that we're pressing higher here. The question is, do we break out to new all-time highs, or do we fail to break out? And then we'll be looking for a new entry point to sell Qualcomm short. I might even be a buyer to the long side next week. I'll keep it small because I am worried about a breakout above 88.63. And I will be using a trailing stop loss order so that we catch as much maximum upside potential as possible with as little downside risk as possible. So please use a trailing stop loss order if you go into this trade to the long side. But the real trade I like is to the short side because, folks, this rally is unsustainable. We have RSI, which is still at 87.15. Volume on Friday was very, very light. So a warning flag is on the track. All is not what it seems with Qualcomm. Stokes is still looking good. We have a double top on ADX green, so be careful. MACD histogram is declining, but it can come back and resume its uptrend. We've seen that many times in the past. And let me clarify my statement about Qualcomm. This is not a short betting that Qualcomm is going to correct dramatically. It's just simply a scalp trade. A few days in, book our profits, move to the sidelines. I think that longer term, I've already seen the weekly and monthly charts and the quarterly charts of Qualcomm. I think that we're going a lot higher on Qualcomm. So this is not a macro play on Qualcomm crashing at all. So please don't take it that way. Longer term, I'm very bullish on Qualcomm. The next extreme overbought trade that we're looking to short and take advantage of, again, a short-term swing trade to the short side. We book profits, we move out of the way because I think that Blackstone BX is probably going to move higher. Now we have RSI at 85.42, very overbought. This is a financial. We have a lot of topping tails on top of these candlesticks. What that's implying is that we have sellers above booking profits. So just be careful here if you're long. Now tomorrow on the week ahead commentary, we're going to use TrendSpider to identify where we have historical extrapolated resistance above. What does that mean? Well, we're at all-time highs right now, so technically there is no resistance above, no overhead supply, meaning no prior buyers looking to get made whole. What we do have, though, is an extrapolated upper band of resistance connecting prior peaks, and we can extrapolate out where we might have historical resistance. So we'll talk about that tomorrow using TrendSpider. And we'll leave off today with Google. This is a weekly chart. This is a continuation breakout trade. I think that Google, in all probability, is breaking out. Let's face it, Google is the internet. There's nothing not to like here. My only concern with Google is antitrust concerns. They are a dominant player, I think far more so than Facebook. So that's my only concern. Technically, however, I think that the shares in all probability are going to break out. Members will talk more about Google tomorrow on the week ahead commentary. That is it for this week, folks. If you're not currently a member, please sign up for our 14-day free trial offer. If you're not ready, that's cool. Please check out in the description area below. On the description area, I have a 5-part series on my favorite candlestick chart patterns. It's a video series. Sign up for that. Enter your email address anywhere on the website. Get my free tutorials and commentary in the future. And don't forget to click the link to visit TrendSpider's website. And of course, don't forget, follow me on YouTube, Facebook, wherever you're watching this. Leave a comment. I'll definitely get back to you. Everybody enjoy the remainder of your weekend. Have a profitable trading week. And remember, trade the charts and not the hype. Be well.